Hello there, aspiring currency connoisseurs. Whether you're a seasoned trader or a complete newbie, you've just stepped into the most dynamic and fast-paced financial arena on the planet. Welcome to the exhilarating world of Forex trading, where fortunes are made and lost faster than you can say quantitative easing. Here, every second counts, and every decision can lead to a windfall or a wipeout. Think of the Forex market as a massive global flea market, but instead of haggling over vintage furniture, you're trading currencies. It's a place where the value of money itself is constantly in flux, influenced by a myriad of factors from political events to economic data releases. It's a wild 24/7 party where everyone's trying to guess which currency is the life of the party, read going up in value, and which one is about to faceplant on the dance floor, read going down. The stakes are high, and the rewards can be immense for those who play their cards right. Now, you wouldn't walk into a flea market blindfolded, would you? Just like you wouldn't dive into the Forex market without a strategy. Preparation and knowledge are your best friends here. That's where technical analysis comes in handy. It's the art and science of reading market data to predict future price movements. By studying charts and patterns, you can gain insights into market behavior and make more informed trading decisions. It's like having X-ray vision for the Forex market, helping you spot potential trading opportunities based on historical data and market trends. You'll learn to identify key indicators, understand market sentiment, and develop strategies that can give you an edge over other traders. So buckle up, Buttercup. We're about to dive headfirst into the thrilling world of Forex technical analysis, and trust me, it's going to be a wild ride. Get ready to explore the tools and techniques that can help you navigate this complex and exciting market. Whether you're aiming for short-term gains or long-term success, the journey starts here. Let's get started. First things first, let's talk charts. Charts are the roadmaps of the Forex world. They show you where a currency pair has been and hopefully give you an idea of where it's headed. Imagine trying to drive across the country without a GPS or even a crumpled-up map from 1987. That's what trading Forex without understanding charts is like. A recipe for disaster, or at least a few wrong turns. Charts come in all shapes and sizes, from line charts to candlestick charts. Each type of chart provides a slightly different view of the market, kind of like those choose-your-own-adventure books, but with more numbers and fewer dragons. The good news is, you don't need to be a technical analysis wizard to understand the basics. Even a rudimentary understanding of charts can give you a leg up in the world of Forex trading. Moving averages are like the reliable old car your grandma used to drive. Not very flashy, but they get the job done. Basically, a moving average smooths out price data over a specific period, like a rolling average. It's kind of like taking the average temperature for the past week, instead of just looking at today's forecast. Traders use moving averages to identify trends and potential support and resistance levels. Think of support as the floor and resistance as the ceiling of a currency pair's price movement. When the price bounces off support, it's like hitting a trampoline. When it hits resistance, it's like running into a wall, hopefully not literally. Popular moving averages include the 50-day, 100-day, and 200-day moving averages. The longer the period, the smoother the moving average and the less it reacts to short-term price fluctuations. Section 4, RSI, the Forex Bouncer. The Relative Strength Index, or RSI, is like the bouncer at the hottest club in town. Just like a bouncer decides who gets in and who stays out, the RSI helps traders determine whether a currency pair is overbought or oversold. It tells you if a currency pair is about to get too crowded or if it's about to become a ghost town. Imagine walking into a club that's either packed to the brim or completely empty. The RSI gives you that insight for the Forex market. The RSI oscillates between 0 and 100. This range helps traders gauge the momentum of a currency pair. When the RSI is closer to 0, it indicates that the currency is oversold, and when it's closer to 100, it suggests that the currency is overbought. A reading above 70 is like having too many people in the club. It's getting crowded, and things could get messy. This is a signal that the currency might be overbought and could be due for a correction. A reading below 30 is like having the club to yourself. It might be a good time to buy, but it could also be a sign that the party's over. This indicates that the currency might be oversold and could be poised for a rebound. Traders use the RSI to identify potential trend reversals. By keeping an eye on the RSI, they can make more informed decisions about when to enter or exit a trade. For example, if a currency pair has been on a tear and the RSI is above 70, it might be a sign that the bulls or buyers are getting tired and a pullback or short-term decline is imminent. Conversely, if the RSI is below 30, it might indicate that the bears or sellers are exhausted and a rally could be on the horizon. Understanding the RSI can give traders a significant edge in the Forex market. It's like having a bouncer who not only controls the crowd, but also gives you a heads up on what to expect next. By combining the RSI with other technical indicators, traders can develop a more comprehensive trading strategy. This helps them navigate the complexities of the Forex market with greater confidence and precision. So the next time you're analyzing a currency pair, remember the RSI, your very own Forex Bouncer, keeping the market in check and helping you make smarter trading decisions. Section 5, MACD, 2 lines and a doodle. The moving average convergence divergence, or MACD, is another popular technical indicator that helps traders identify trend changes and momentum. It sounds complicated, but it's really just 2 lines and a doodle, or histogram. Imagine you're watching a horse race. The 2 lines in the MACD indicator are like 2 horses running at different speeds. The faster horse represents the shorter-term moving average, while the slower horse represents the longer-term moving average. When the faster horse crosses above the slower horse, it's a bullish signal, like the faster horse taking the lead. When the faster horse crosses below the slower horse, it's a bearish signal. The doodle or histogram shows the difference between the 2 lines. When the doodle is above 0, it's a bullish signal. When it's below 0, it's a bearish signal. Section 6, Tools of the Trade. More than just crayons and construction paper. Now that you're familiar with some basic technical indicators, let's talk about the tools you need to put them into practice. Don't worry, you won't need a fancy Bloomberg terminal or a direct line to Wall Street, though those would be nice. First and foremost, you'll need a reliable trading platform. Think of a trading platform as your mission control center. It's where you'll access charts, place trades, and monitor your positions. There are tons of trading platforms out there, many of which are free or offer free trials. In addition to a trading platform, you'll want to familiarize yourself with charting software. Charting software allows you to plot indicators, draw trend lines, and analyze historical data in more detail. It's like having a super-powered magnifying glass for the Forex market. Section 7. Wrap up, don't bet the farm, yet. Congratulations, you've made it to the end of this section. You've officially dipped your toes into the exciting and occasionally terrifying world of Forex technical analysis. It's a significant milestone, and you should be proud of your progress. Remember, this is just the tip of the iceberg. What you've learned so far is foundational, but there's so much more beneath the surface. There are countless other indicators, tools, and strategies out there waiting to be discovered. Each one offers a new perspective and can help you refine your trading approach. Think of technical analysis as a lifelong journey, not a destination. It's a continuous process of learning, adapting, and evolving. The more you learn, the more you realize there's always more to learn. It's a field that's constantly changing, with new techniques and insights emerging all the time. It's like trying to drink from a fire hose of financial knowledge. You're bound to get wet, but hopefully you'll also quench your thirst for knowledge. The key is to pace yourself and not get overwhelmed. Most importantly, remember to have fun. Trading should be an enjoyable experience, even when it's challenging. Forex trading can be stressful, but it should also be enjoyable. Celebrate your successes, no matter how small, and learn from your setbacks. So, don't be afraid to experiment, make mistakes, and learn from your experiences. Each mistake is a learning opportunity that brings you closer to becoming a proficient trader. After all, the only way to become a seasoned Forex trader is to jump in and get your hands dirty. Engage with the markets, test different strategies, and find what works best for you. Just maybe, don't bet the farm on your first trade. Start small, manage your risks, and gradually build your confidence and skills. Keep a trading journal to track your progress and reflect on your trades. This will help you identify patterns and improve your decision-making over time. Surround yourself with a community of traders. Sharing insights and learning from others can accelerate your growth and provide valuable support. Set realistic goals and celebrate when you achieve them. Each milestone is a step forward in your trading journey. And don't forget to take breaks. Trading can be intense, so it's important to step back and recharge. With patience, persistence, and a positive mindset, you'll navigate the ups and downs of Forex trading. The journey is long, but the rewards can be substantial, so keep learning, stay curious, and enjoy the ride. Your adventure in Forex trading is just beginning.